Welcome to Breaking the Matrix. I am RC and I am here with my partner in financial crime, the man who can make the stock rise faster than a bite dip, Rich. I am ready, RC. Today we are going to break the matrix and take our listeners to the trading dimension. It doesn't matter if you are trading stocks, futures, or crypto, or even forex. We have got it all covered. Let's start with the basic, Rich. To understand how to dominate trading in the future, you need to know the past. Let's rewind to the 19th century, the golden age of the stock market. Back then, the markets were total chaos. But along came a visionary guy, Charles Dow, who created the Dow Jones and formulated what we now call the Dow theory. That guy was a genius. Picture Dow as that wise old grandpa who gives you financial advice with charts. His theory tells us that markets move in three trends: primary, secondary, and minor. But the most important thing, according to Dow, is that trend is your friend. If it is going up, you go up with it. Don't try to swim against the current. And let's not forget something else Dow said. Markets are efficient. All the information that influences stock prices is already reflected in the price. So if you hear rumors or news, the market probably already knows about it before you do. Totally, and even though the markets today seem more sophisticated than ever, they are still driven by human emotions, and those emotions often create totally irrational movements, and that's where we come in as traders to take advantage of those emotional mistakes. Now let's talk, Rich, about trading strategies across different markets. Stocks are the traditional go-to, but what if you want to take it up a notch? Let's break down futures and crypto. Stocks are the classic. If you're a beginner, I recommend starting here. You can choose day trading, swing trading, or long-term investing. Day trading is for the brave. It's like running a marathon where you have to be laser focused, making decisions on the fly. But watch out, if you get distracted, you can lose it all. It's pure adrenaline, but a lot of pressure. And it's like an adrenaline marathon. But if you prefer something more relaxed, swing trading is like a walk in the park. You hold your position for days or weeks just following the trend. And if you want even a more laid back approach, long term investing is like sitting back with a cup of coffee, watching everything grow. And here's a key tip: if you can handle seeing your investment move like a roller coaster, then crypto might not be for you. Bitcoin and other cryptos trade 24/7, meaning the action never stops. If you can handle sudden drops, think twice before jumping in. But if you jump into the world of crypto, Bitcoin might be at 40,000 one day, 50,000 another day, and suddenly next day drop to 20,000. It's a wild ride. But if you know how to manage that volatility, it can be very profitable. Now let's talk about futures. This market has a lot more history than most people realize. Futures contracts were created back in the 19th century to help farmers protect against price volatility in their crops. Basically, they would sign contracts to sell their products at set price months in advance. And now it's a war of leverage. Futures are used for not just for commodities, but also stocks, index, and even crypto. While in the stock market you buy or sell the asset directly, in the future you are betting on whether the price will go up or down without ever owning the asset. And here's what's super interesting about futures: leverage. You can control a huge amount of value with a small investment, but of course, if you are not careful, you can lose it even faster than you gained it. Exactly, in future, risk management is crucial. And here's is the most important part of all this, Rich: risk management. Without a plan, you are basically playing with fire. One small mistake can cost you big time. Risk management is like a parachute. If you don't open it on time, you are going to crash. Set stop loss. They are one of our most powerful tools. Don't let one bad trade ruin your entire day. And like we always say, never put all your money into a single trade. Yeah, the professionals always give us one advice here. You can put maybe 1% or maximum 2% of the total amount you are interested in invest. Diversification is key. Like we say, don't put all your eggs in one basket. If one asset crashes, at least you don't lose everything. It's like insurance for your money. Rich, Before we wrap up, I have got some questions for our listeners. What would you say to a rookie trader who try day trading a stock without much experience? It's like a kid trying to drive a Ferrari without knowing how to start it. If you are a beginner, start with a stock long term or swing trading. Day trading is like going to war without any armor. And the last one, what advice would you give you someone who wants to start trading a stock? Study, practice, and don't let panic control you. Markets go up and down, but if you know what you're doing, you can profit from those moves. And always set a stop loss. See you next time, guys. Keep trading, keep learning, and most importantly, don't let the metrics trap you. We'll be back.